Director with S&P Capital IQ Global Markets Intelligence. In this week's Lookout Report, we take a look at expectations for the second quarter earnings season for S&P 500 companies. Second quarter earnings season for the S&P 500 began on Monday when Alcoa reported results. The company beat both on the top and the bottom line, albeit the estimates Alcoa beat had been severely ratcheted down by analysts. Including the 4 companies that have reported thus far this week, the S&P Capital IQ estimate for second quarter currently stands at 2.9%. However, we believe that estimates have been lowered too much and that growth this quarter could be closer to 6 or 7%. Looking back over the last 10 quarters, we see that just before Alcoa reports, estimates are roughly 4.7 percentage points lower than the growth rate recorded at the end of earnings season. The trailing 4-quarter trend is a little lower at 3.8 percentage points. We believe that this quarter will be in line with the more recent trend, which would put us in the 6 to 7% range. The sectors to watch this quarter are financials and consumer discretionary, expected to be the 2 leading sectors with 16% and 14.4% growth respectively. Within financials, the big banks are supporting growth. The capital markets and diversified financial services are expecting the highest growth figures of any industry. And thanks to positive housing data during the quarter, REITs are looking to grow 29%, and real estate management and development is expected to grow 26%. As for consumer discretionary, that sector is again being driven by the household durables and the textiles, apparel, and luxury goods industries. On the flip side, materials and information technology are anticipated to be the laggards this season, with negative growth of 5% and 4.6%. Within the materials sector, the metals and mining industry continues to be a weak spot, expected to fall 42% from the year-ago period. An overall decrease in the price of commodities during the second quarter of 2013 is responsible for the difficult year-over-year comparison. For IT, the industries responsible for the year-over-year decline are computers and peripherals and semiconductors. The computers and peripherals industry and the sector as a whole is suffering due to dismal expectations for Apple. The company is expecting earnings per share to come in at $7.31 versus $9.32 a year ago, a 22% decline year-over-year. A metric that is projected to stay depressed for the quarter is revenue growth. Top-line growth is currently estimated to come in at negative 0.6%, the first negative growth rate seen since the third quarter of 2009. This is attributable, by and large, to the energy and utilities sectors and remains much lower than the 10-year average of 7%, with only 5 of the 10 sectors expecting positive revenue growth for the second quarter. Peak earnings season begins next week, with 75 companies expected to report. I'm Christine Short, and thank you for tuning in to this week's edition of the Lookout Report.